UnitedHealth Group stock. Big funds, smart money have been buying and they've been trying to hide it. We're going to go over the data. We're also going to look at what it was previously. So what right now we see, and a lot of this data, the 13Fs are still coming in for which funds have purchased or sold, but we're still at 89.45%. And this right now, if we look back over a year ago, we are almost exactly the same. This is really what I like to look at. Now, this data does also include short potential shares, and it also includes options. And different sites will utilize this data. They'll collect it a little differently. But right now, about a 90% look on this, and this is coming in with new 13Fs as well. I want it to stay around this. Now, I do think that potentially 1 or 2% might have sold out, but we're going to look at the actual data. I've seen a lot of people floating this around, upcoming 13Fs that are coming in. We're still around 17 count on the super investors here. Now, if you look at this percentage, it's a 0.332. We look back and we're going back to March. So before some of the massive volume and the massive drops, still 17, though the hold price then was 505 and it was 0.395 percentage ownership count. So the data is not too much different. So this is very bullish to me. I mean, when the price is, literally cut in half from this point almost. So, the low then was only 429 and these funds have far higher averages and it was 625 then. And, that's why I love using and looking back at the old data, because a lot of people, they kind of forget how the stocks were trading. I've seen other stocks where this percentage at the all-time highs for a lot of stocks, this was far lower for some of these stocks. I've seen it in the 80s, low 70s, and stocks hit all-time high. Now, these institutions, some of these have been holding since the early 2000s. So you want them to keep holding, and it's a dividend fund too. So you want all the dividend funds to still hold and not sell. Now, there is some data we're looking at. Where does the money flow when people sell UnitedHealth Group, and where is it coming from? Now, a lot of the big, obviously a lot of these big institutions, they're going to want to hold something like this. So if they buy, it's coming from them. Now, when they sell, I've noticed, Berkshire Hathaway, it looks like some of the people that had this are looking for other safety stocks potentially and holdings, and maybe even healthcare. We see a few here. But from what I can tell right now, I find this very bullish. And the part that we're going to talk about, how these institutions are potentially hiding these types of loading up in the buys. Because remember, when you have 90% of the institution held, that's literally locked up, and the company doesn't have, 3, 4, 5 billion shares like other companies, it's in the 900 plus million. So when you have most of those locked up and you have a big institution, that has trillions AUM, they are going to potentially do what we're about to talk about. The most outstanding right now, highest volume, have been these 470 puts. Now, this has been happening for literally like the last 2 months. And what's going on is the open interest on this is only 1,225, but we've seen days where it was over 40,000. So what they're doing is they're buying these puts, and because a lot of these, they're very close to expiration, they're deep in the money. What they do is they'll buy these and then they'll immediately exercise them. So there'll be no open interest, still on the books. But what that does, and you can see here, these are the actual options, those that expire in a week. And these are not just happening here. These are puts across the board. So I find this very bullish. You can see the volume here. This, out of all these, this is 124,000 volume the past week for these puts. And what they do when they buy these, they'll literally sell the stock at the 470. And because the difference is costing them like 30 cents per contract. When they're buying, 30, 40,000 of these and, 100,000 of them potentially if it's a fund in the week, they will essentially short, like the 40,000 they're shorting like, 4 million shares at that point. Now what happens, their prime broker, these big institutions, what they're doing basically to explain this is they are trying to lock up a good amount of shares without going into the actual market. They're going to sell short this, right? Their prime broker is going to have to find these shares for them. And they do it kind of behind the scenes. So they're not going to be doing this directly potentially in the market. It's going to be in dark pools. It's going to be, and it's also not going to really show their hand as much. In a 90% institutionally held stock, there's a potential that you'll set off the algorithms and it's going to be hard. And the slippage for you to get that much over time, you can really push a stock up, especially when the market cap, it's dropped 60+% and it's mostly held by institutions. So this is very unusual. We're seeing, like I said, the open interest stay the same. And that's one of the reasons why a hedge fund might be doing that. We're not just seeing it there, we're seeing it across the board on some literally expirations for today. 20 million here on the 280 put.
It's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You pay for 1% or 2%.
Right, and then do you get long before Macworld and the expectation that the iPhone is going to be good? Right, and then you go back, flip to the long side.
Got to use the other side.
Interesting.
Yeah, and there's a case where I would say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common, and then you play it right into Macworld where they'll probably introduce the phone and Verizon's going to take it. And, I think that's a very effective way to keep a stock down.
Right.
I might also, by the way, because the stock at 84, 85, with a little bit of capital, you go buy some January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts, then you go position limit with, you use a hat firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer UBS. Then they call Pisani again. You have to use those guys and say, listen, I see a big buyer of puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about it except
but
you.
What's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. But by the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
I'm looking and I'm saying, you know what? I think an institution is, there's only 1,200 open interest. This is the institution buying this, 40,000 potentially. And I think literally this past week, 124,000 is probably the same institution. And they're able to, because they're shorting the stock, it might even temporarily push the stock down a little bit. So their prime broker can find shares out there, whether in dark pool, whether it's literally working with other, brokers, they are able to load up a position and it's not like they're really showing their entire hand. So I find this very bullish, especially because, the stock's done pretty good, 2.5% today nearly, closing for the weekend. And we've seen other stocks in the sector and everything start to get a lot of buys coming in. And remember, we're at that like 30 almost year recently low, comparing the health sector to, the S&P 500. Now, when we're looking at some of this data, it's lagging indicators, right? So when this data comes in, a lot of the biggest moves have been previously. Geo Capital, like they're buying, right? And this was the newest one. But remember, this was also, when this reports, this is all lagging. This wasn't like they bought and this was literally they bought today. This was months ago, right? So and it can tell you like their average is probably pretty low compared to some of these other bigger holders. They're going to have higher averages, and I doubt they're going to dump it right away. And I think that's why that institutional ownership is going to stay pretty high. Now, if we look through and restrict the hedge funds, I like to do that as well when we do this. And you can kind of see like there are some coming in, some of the largest ones here. There's been some trimming, there have been some buying, and these are actually pretty big percentages ranked in their portfolios, top percentages potentially. And a lot of funds, like they'll max it like 3% sometimes, and we're starting to see, that type of buying come in, some trimming, some selling, but it's starting to seriously look pretty balanced. Starting to see some funds, it's nothing like out of the norm. You also start to see some funds that are selling. A lot of these funds though are passive. So they're not, active hedge funds. A lot of these funds are the passive funds, trimming, selling, looking to buy. And as we saw, maybe they're looking to buy into something else. A lot of these that have trimmed, potentially their averages were far lower. Like, look at this, 140 average. So they've been holding this for literally since the global financial crisis. So they're starting to take some profits. You see some other funds that are selling. They might have bought too high, so they want to get off the books. Next week, when all the filings should be in, you've also seen dark pool volumes. You've seen institutions just in the dark pool. The volume percentage is going up. I like to see that as well. It's a great way, I think, that a fund can get in for very little slippage too. So like this might cost them, $1 million or so on this. And if they were going to go into the market, it could cost them multi-millions and even more depending what happens. I love these types of plays. I love these deep value plays. If we're looking at the overall stock, we're starting to see the record weekly volume here. And the last time at this price, at this level, market cap making this much more, 160 plus billion more revenue since this 2020 drop, it's pretty much the highest green candle for volume in literally the week's time that we've ever seen. Now you can go back and potentially back here at a lower price, there's going to be more volume, but the market cap was a lot smaller. It's not as much traded. So I do like to see that. It doesn't necessarily mean there's going to be a reversal. We had this here, right? After the big drop, there was a reversal and it went back into the 300s, but earnings and outlook, that's where we're at. And this stuff, the reason why this stock, and it's crazy that these options, the long call options, the leaps, the IVs so low, I think this is going to change real quick because I don't really think that it should be trading a lot of these options as cheap as they are. A lot of these, I've seen a lot of anomalies too. This is one of those that you can consider very unusual. But having a stock like this, UnitedHealth Group, without a bankrupt risk, right? A lot of stocks, when they drop this much, there's a bankrupt risk. And we've seen with other stocks that did far worse, financial crimes against millions and millions of people. Those stocks, Wells Fargo, they're hundreds of percent up now. Even Meta, like we talked about before, Meta is still facing ongoing litigation where it could literally break up their entire monopoly, right? So you're starting to see potential funds come back in here, but it doesn't necessarily mean there's a bottom. I do like that we closed the week green. I like that we're at the 250 mark. I think it's like one of these like psychological places to potentially get right here where we bounced back there, the double bottom, and we'll see what happens, going forward. I'm very bullish. We're going to keep covering the stock on this channel. If you guys like these videos, definitely comment below. Do you think this is a hedge fund, a big hedge fund loading up? I don't think it's anyone like Warren Buffett or anyone like that, but I do think it's a smart fund, maybe even a super fund adding. We'll look at those 13Fs over the next week